Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Mrs. Bella Machetla, and this lesson is brought to you by the Northern Cape Department of Education in collaboration with Pagama Research and Development. Now, on today's lesson, we'll be looking at financial indicators as a follow-up on the previous lesson. We are going to look at the analysis and interpretation and also look at the majority shareholding calculations and so forth. All right. So by the end of this lesson, you must be able to identify the relevant financial indicators. You must be able to analyze and comment on the relevant financial indicators. And you must be able to calculate the majority shareholding, the number of shares that are being issued, and the percentage shareholding of a particular shareholder. All right. So these are the financial indicators that you will be tested on in your paper 1. All right, so let's quickly look. We said that the financial indicators are divided into different groups. We said we've got the profitability group. That is group number 1. That is where we are dealing with percentages, and we are getting this information from our statement of comprehensive income. All right. And then we said that these ratios or financial indicators are very easy to remember because they actually tell you the formula. It says, for example, gross profit on cost of sales. That means your gross profit must be at the top and your cost of sales will be at the bottom. All right. Then that is the first group. The second group is the solvency. The solvency is the big brother of the current ratio. So what does that mean? It means that the current ratio says current assets to current liability. So solvency is bigger. So we are dealing with total assets to total liabilities. All right. So that is the story there. Then the third financial indicator group is our liquidity. Now we said that our liquidity is more referring to our working capital. So we are looking at our assets, we are looking at our debtors, and we are looking at our creditors. Well, short term with that regard. Okay, so that is the story with the third group, which is liquidity. And then let us go to the next one, which is the return. The return is basically what the word is actually saying, what the shareholders are going to get in return with regards after they have invested whatever they've invested in the company. So we've got our return on shareholders' equity. Now we use this most of the time when the examiner wants to know should the shareholder be satisfied with the return, and then we compare that with our interest on other investments that we could have actually invested into. All right, then we've got our ROTCE. Please remember the difference between the two. The ROSHA we compared with the interest on fixed deposit or other investments. That is the interest that we earn. Okay, and then the ROTCE is the one that is relative to our interest on loan. And obviously, this is the interest that we actually pay. All right. So that is the difference between the two. All right. Now, the fifth group, sorry about that, is our financial risk, which is the gearing financial indicator. So we said under the gearing or risk, we have two indicators that we deal with. It is our debt equity and our ROTCE. So whenever we have to deal with a loan situation, then we will be comparing the two. And also when we are making financial strategies, right, when we're looking at raising capital, those are the financial indicators that we take into consideration. Should we rather issue some shares, or can we actually afford another loan? All right, so most importantly, you need to know your formula sheet and not just necessarily be familiar with it and oh, that's a formula sheet. No, you need to know exactly where to look for the financial indicators. We've highlighted that the yellow, meaning the top part of your formula sheet, is our profitability. So should you encounter a question where you have to calculate a profitability ratio, it should be very quick. If you quickly remind yourself of the formula, you quickly check, and then you go into writing the formula. As soon as you don't know where it's placed, you are going to waste time And we have to work as quick as possible. All right. So at the top, we have our our profitability. And then we've got our solvency, which is group number 2. And then after that, we've got our liquidity in green. All right. You will see it's distributed in the middle of your formula sheet. And then at the bottom, number 4, the risk and gearing. And then at the bottom of your formula sheet, you'll have your returns. All right. So it must be an easy thing for you to actually do during the exam. So it means that while you're studying, you need to make sure that you have a formula sheet in front of you and you quickly label it. All right. So that you can see that you know which formula to use every time you have to calculate a particular indicator. All right. Now, today we're going to look at the return aspect because we've covered the other 3 in the previous lesson. So we are looking at the returns, and these are the financial indicators that are relative to returns. All right. So the question says there, it says, the following relates to 2 companies, the Guardian Ltd and Navara Ltd, dividends, earnings, and returns. This is the heading of it, right? And then it says, explain one financial indicator which indicates that a concerned shareholder should not be satisfied with the change in the dividend policy. So what are they talking about here? Dividend policy. All right. Then they are giving you 3 marks for that. And then they say, explain whether the shareholders should be satisfied with the earnings and the returns of the company. So it means that this particular question requires one of these financial indicators, or rather a couple of financial indicators from this group. All right. And you need to know which indicator is relative. The moment you read dividend or dividend policy, you must know which indicator that you need to use. The moment you read earnings, you need to know which financial indicator is associated with earnings. The moment they talk about returns, you need to be able to identify which financial indicator are they specifically talking about in the returns group. All right. So I'm going to give you 5 minutes to quickly complete this question. All the best, grade 12s. Welcome back, grade 12. Now let's quickly look at the information that is provided over here. So they asked us to comment about our dividend payout rate or dividend policy. Now, our current financial year is 2023, right? And we are comparing the 2 companies. If I'm not mistaken, let's quickly read the question. It says, explain one financial indicator which indicates that a concerned shareholder should not be satisfied with the change in dividend policy. All right. And then we are looking at which company? We are looking at the Navara Ltd. Okay. So this question can either be this type of a question, or you can compare the 2. Which dividend policy is better than the other? All right. And what it actually means. Now, moving on to our information. So for Navara Ltd, this is our dividend policy for 2023. It was 103.8. This is the payout rate, the financial indicator that is relative to dividend policy. All right. And then the dividends per share, comparing it with the EPS. Okay. So the dividend payout rate is saying that how much from the earnings per share is actually allocated as dividends to our shareholders. That is why our formula says it is our dividends per share over earnings per share. All right. So the earnings per share is how much profit each share has actually earned. All right. And then, for example, if a share has actually earned a profit of 200 cents, which is 2 rand, how much from that 2 rand are the shareholders receiving as a dividend per share? right? So, for example, you can say the shareholders are getting 50 cents from the 2 rand that each share has earned. So that means 50 out of 200. That is how we are calculating our dividends payout rate. All right. So we need to compare the 2 years. We are saying that last year the shareholders only received 34.8%, and in this financial year the shareholders have actually received a dividend amounting to 103.8%. So that is how much we've actually allocated. Do you see that we've allocated more than what we have earned in this financial year? We've only earned 80 cents per share, and then we have actually allocated to our shareholders 83 cents. That is why our financial indicator for payout rate is actually above 100. Okay, so we have actually given our shareholders what we earned plus some of our retained income from the previous financial year. Okay, so let us quickly go to the solution. So the dividend payout rate increased from this financial year to, well, the previous financial year to this year. There has been a significant increase. So you will get a mark for the payout rate increase. You get a mark for indicating that it went from 34.8 to 103.8%. I want to mention again that I don't prefer that you use the by, because should it happen that you make an error, you are going to be penalized on that error. Rather quote the financial indicator as it is. All right, so moving on. Another financial indicator that is relevant, as I've mentioned, the dividends per share at 83 cents is 3 cents more than the previous year, and the earnings per share dropped from 115 cents to 80 cents. All right, then that is your 2 marks. All right, remember it's relative. That is how we calculate our dividends payout rate, by saying our dividends divided by our EPS. Right, financial indicators sorted. We've got our 2 marks, actually 4 marks. No problems there. And then how do we comment? We are saying that the funds from the retained income, this is the possible answer that you can give me. The funds from the retained income were used for the current year's dividends. Why? Because 100% of the dividends that were issued is what we earned this year, and 3.8% must come from somewhere. And where is it going to come from? From the money that we've been putting away for future growth and expansion. We are using it now as dividends to our shareholders. All right. Or you could have actually mentioned the fact that the directors are depleting the reserves. So we might not have reserves in the future, which could have been used in the future expansions. Directors are not concerned about future growth or the sustainability of the company. So this is a point that you could have also mentioned as a point. And then you could have also mentioned the directors simply concerned about what? They are concerned about being re-elected or keep the shareholders happy. Remember, the shareholders may change their minds based on the amount of dividends that they are receiving in terms of investing in the company. So in order for us to encourage our shareholders to stay invested in the company, or also invest more money in the company, is that they need to feel that they are receiving sufficient returns. So sometimes the directors will make this type of decision in order to make sure that the shareholders are happy and encourage them to invest more and also to stay on board. All right. So that is the first aspect of the question. All right. Let me just quickly check. The second aspect, let's go back so we can answer the actual question itself. Now, let us address the next question. The next question is saying, explain whether the shareholders should be satisfied with the earnings and the returns of the company. All right. So the earnings and the returns. So how do we approach this question? We will simply say that our earnings, obviously it's the earnings per share. We look at the earnings per share. After looking at the earnings per share, we comment based on that. All right. So our earnings per share have decreased from 115 cents to 80 cents per share. All right. So this is the trend. So you get 1 mark for identifying the financial indicator. How did I identify the financial indicator? Because they said I must comment about the earnings. Do you see earnings per share? That is the relevant financial indicator. And then you look at the trend. Did it increase or decrease from the previous financial year? So basically, our share, each share earned 115 cents in the previous year. And then in this financial year, a share only earned 80 cents. All right. So, or you could have used buy. That is also a relevant amount or a relevant calculation, if I may put it that way. However, it's always best for you to quote the figures as they are so that you avoid you losing marks should you make an error in calculation. Okay, now another financial indicator that is relevant over here, it is the return on average shareholders' equity. Now, do you see that it's the return? So that is the second financial indicator that you need to deal with. So in this question, they asked you to talk about the earnings. And they also said you must talk about the return. And the return is the ROSHA. The earnings is the EPS, which is the earnings per share. And then you walk away with your 2 marks plus the trend of that one. And then we quickly look. It decreased from 11% to 6.4%. All right. Now let us quickly comment then. The comment says the following. The shareholders should be concerned as the return is lower than the outside investments of 9%. So I did mention that we compare our ROSHA to our interest on investments. So what does this mean, grade 12s? This is what it means. If I am a shareholder and I had money that I wanted to invest in a particular company, right? For example, 100,000. Now, it's either I invest in this type of company, right? I invest it as and buy shares, or I can take my 100,000 and put it in a fixed deposit or an alternative investment, right? And then I look at how much interest am I going to receive, or rather return will I receive on that particular investment. In this case, my 100,000 I've invested in this particular company, Navara Ltd, right? And I'm only receiving 6.4% back. Are we following? While I could have taken my 100,000 and invested it in an alternative investment and I would have received 9% back. So I would have earned more interest, or I would have gotten or received a bigger return in a different investment rather than investing in this particular company. All right, so that is the situation there. So there was a decrease in profitability as well. That is also something that you can have mentioned, and therefore that's why we are having a lower return. As we've highlighted that the earnings per share was how much? Was 115 cents, and now it decreased to 80 cents. So our profitability is not as high as the previous financial year. All right. So that is what we are looking at. Now let us get to the share capital and the majority shareholding aspect. Now, the share capital and majority shareholding aspect, we are looking at the amount of shares that have been bought or sold within a particular company, right? We are looking at how much an individual shareholder, how many shares an individual shareholder actually has bought within a particular company and how much they have spent with regards to those particular shares. All right. And then we are looking at the legalities, meaning the share rights. Are they allowed to do this particular thing in terms of selling only to shareholders within the particular company and so forth? Right. Now let us do activity 2. Activity 2 says the following. The information relates to Western Ltd for the year ended 29 February 2024. Now, Grant Waters Percentage Shareholding Rights Issue and Shareholders Purchase. This is the name of the company. All right. Refer to information B, the name of the shareholder, sorry. Calculate the number of shares that Grant bought through the rights issue, right, on 31 October 2023. Now let us look at the information. And this is for 3 marks, right? The information is provided there, the background of what happened in this company, and B, the share capital rights issue. And you have to calculate how many shares he has actually bought. Okay, so that's the story there. Now I will give you 3 minutes to quickly calculate this particular question. See you in 3. Welcome back, grade 12s. Now let's quickly read. It says A, the background information. The Chief Executive Officer, Shakira Solomon, was appointed on 1 October 2023. She was awarded 1-year contract on probation. Grant Waters, the majority shareholder, was instrumental in appointing the CEO on 1 October 2023. Now, B, the capital and the rights issue. So we are talking about the shares now, all right? Now, 3 million shares were already in issue on 1 March 2023. Now, this is the beginning of the financial year, all right? And then, Grant Waters shareholding. He is the majority shareholder and owned 1620, meaning 1,620,000 of the issued shares on 1 March 2023. So from the 3 million, he owns 1,620,000. Okay, and then it says rights issue. On 31 October 2023, each shareholder was offered 10 shares for every 50 shares that they owned at the reduced price. All shareholders exercised this right. No other shares were issued or repurchased during the financial year. So you were requested to calculate the number of shares that Grant Waters have actually bought. All right. So let us quickly look. They said 50 for every 50 shares they own, they will receive 10. Okay. So I'm going to say my 1,620,000 divided by the number of shares, right? And then I multiply that by 10 because they are offering 10 of that. Okay? So then that means that these are the number of shares that Grant Waters actually bought on the 31st of October. Then, so when we look at this activity, we are going to read the question very carefully, all right? It says, calculate Grant's shareholding after the rights issue on 29 February 2024. So we are looking for the new balance for Grant's shareholding because we know that on the 1st of March, it was 1620,000. That's the beginning of our financial year. And then on the 31st of October, he bought additional shares. Now, how many shares does he own at that particular time frame, and we are looking for the specific percentage, not necessarily the number of shares. We are looking at the percentage shareholding of Grant Waters at this particular moment. All right, so I will give you 4 minutes to quickly go and calculate this question. All the best. See you now. Welcome back, grade 12s. Now let's quickly check. Oh, this was actually 4 minutes. Let's quickly check the information that is provided. We've already gone through this information. We know that there were 3 million shares that were in issue at the beginning of the financial year. We know that Grant Waters had or was in possession of 1,620,000, meaning 1,620,000 shares, and he purchased, or the shareholders specifically. Let us quickly see. There's a part that says on the 31st October 2023, each shareholder was offered, right, shares, and also all the shareholders exercise this right. This is the most important aspect, because many times you guys miss this information because you are not reading. It's not only Grant who actually used his rights to actually buy shares. All the shareholders. That means that the number of shares that are being issued are more than just what we have calculated for Grant. We need to add the rest of the other shareholders. Okay, so, but with that said, let's quickly do this. We were looking for Grant's shareholding percentage after he has now bought the new shares. So it's 1,620,000. That is the shares that he owned at the beginning of the financial year. And then we have calculated the number of shares that he bought. Now, because you can see this question is a leading question, meaning you need an answer from a previous question. So if you copied this amount from your previous question, then you will get yourself a principal mark over there. All right. And then the next question you're going to ask me is, where am I getting my 3,600,000? Now, the number of shares that were in issue at the time were 3 million at the beginning of the financial year. And they said that they gave all the shareholders an opportunity to buy more shares. And how do they calculate those shares? They said 3 million, the number of shares that were in issue to all the shareholders is 3 million, divided by the 50, because they said for every 50 that was issued or every 50 that was owned by the specific shareholders, multiply by 10. They will get 10 of that. Okay, so in this calculation, you are going to get 3 million plus 600,000. This gives me 600,000. And then we'll move on and get our 3,600,000. So that is 2 marks, grade 12s. All right. And then we have to multiply by 100 because we are looking for a percentage. Then we multiplied it by 100 and we got our 54%. All right. Or alternatively, you would have said 1,380,000. You add it with the 276,000, right? And then you divide that by the 3,600,000. You multiply by 100, and then because this is calculating the 46%. Now this is what was not issued. All right. So then therefore, this is what's issued to the other shareholders. Other shareholders. So that means out of 100%, Grant had the remaining 54%. So you could have used either approaches as long as you got to the final answer and you showed your workings. It's very important for you to always show your workings, grade 12s. All right, so let us go on to the next activity. The next activity says calculate the total amount that Grant spent on the shares he acquired through the rights issue. And then it further on says, it's very important to read, no shares were repurchased during the year. All right, so you can use the information as is. Okay, so I will give you 3 minutes just to attempt this question, and then I'll see you after 3. Welcome back. Now let's see what you have been up to. All right. So you were requested to actually calculate how much money Grant actually spent on the new shares that he's actually purchased, right? So that is a very simple one. You are going to take the number of shares that he's actually purchased, you multiply it with your selling price, all right, which is 4.95 cents, all right, and then that will give you your answer over there. You could have also used this approach and gotten to the same answer over here. So the most important thing I'm going to reiterate is the fact that you need to be able to show your workings, all right, and this is also a principal mark. Right, and also it's a working mark over there. All right, now that is that grade 12s. Your homework is as follows. It says that Janice creates a percentage shareholder and the share capital over here. It says calculate the amount spent by Shanice. What are we looking for? The amount spent by Shanice. All right, and then on the shares bought 31 January 2025, she was allowed to buy shares equal to 1/5 of the shares she already owned. And then no shares were repurchased during the financial year out of 3 marks. That is your homework. All right. Now, this is an extract from the Gauteng province June paper for this year. So please attempt the question. 3.6.2 says Shanice wants to be a majority shareholder. Explain whether she managed to achieve her goal. Show all workings for 6 marks. Okay. Remember, to become the majority shareholder, you need to have 50% plus 1 or 51%, depending on what the examiner is actually requesting. All right. Explain one consequence of the company for allowing Shanice to buy shares equal to 1/5 of these shares. Now, this is a rights issue question. Attempt these questions and all the best. All right. Now, quick exam tips for you for the exams, right? Make sure that you use your reading time. How are you using your reading time? You are going to take your question paper, you take your answer book, all right? And then you read each question looking at what is expected of you in terms of the tables and so forth, so that by the time you are ready to start, you've already identified which questions you need to start with, and you are able to perform with a little bit more confidence because you're not seeing the questions at first glance. All right. Then the second tip that I can give you, you will see that on the first page, actually at the back of your cover page of your exam paper, you will have a time allocation table there provided for you, indicating how much time you should actually spend on a particular question. Please make use of that table. Try to stick to the time allocations that are stipulated on that table so that you can be able to get the most marks as possible, right? And then the third tip is that do the questions that you know first. So the big thing is you have questions with 150 marks, right? You might not know the answers of all the questions there. So always attempt the questions where you are most comfortable, and you can work as quick as possible on those questions so that you can get all the marks that you could possibly get in the paper. Rather than sitting for a whole hour on a question and losing out on the rest of the marks, you actually maximize the amount of marks that you can get based on the questions that you are confident in. So always start with the questions you're confident in so that you are able to get the most marks. All right. Then study your formats and your formulas. Now, going into an exam room without knowing your formats and knowing your formulas, it's like going to a place and you are extremely unprepared. You're going to Antarctica and you've got summer clothes on. It's not going to work out for you, grade 12s. You need to make sure that what is expected of you in terms of your formulas and your formats are already there in order for you to capitalize on the operational marks and all the principal marks that are required in that particular question. All right, now in the next lesson, we'll be looking at the structure of your paper 2, and we'll also be talking about your bank reconciliation. And we'll be looking at other aspects of bank reconciliation just to refresh your memory and to ensure that you get the maximum amount of marks possible. All right, now with that said, grade 12s, I'd like to thank you for joining us, and I will see you when you see me. All right, have a good one. Bye.